What happens when Poland cuts interest rates? In this video, I explain how interest rate decisions made by the National Bank of Poland can influence everything from the stock market to real estate and treasury bonds. Whether you are investing in Polish stocks, buying bonds, or looking at the real estates, interest rates matter. Let's break it all down. Before we dive in, important notice. I am not a financial advisor and this is not an investment recommendation. I'm just an individual investor sharing my personal experience. If you want to invest, please do your own research. Now, let's dive in. What are interest rates and why do they matter? Interest rates are the price of borrowing money. When the central bank, in this case the National Bank of Poland, cuts rates, loans get cheaper, investments go up, and people spend more. On paper, it sounds great for the local economy and even for the stock market. But there is more to the story, especially when foreign investors are involved. Lower interest rate equal weaker currency. Lower interest rate often lead to a weaker currency. In this case, the Polish zloty may lose value against the euro or the dollar. Why? Because investors get lower returns on holding assets in Polish zloty, so they move their money elsewhere. For foreign investors, this means currency risk. Even if your investment in Polish stocks grows by 10%, you could lose it all if the zloty drops by 10%. Big international funds constantly compare the risk and reward. If the US or EU offer similar interest rates and stable currency, why take the risk in Poland? That's why the National Bank of Poland often keeps rates higher than in the Eurozone or the US. So when the National Bank of Poland cuts interest rate aggressively, the foreign capital might pull out. But that's not always the case. If a rate cut is smart and supports growth, many investors see a long-term opportunity. Cheaper credit can boost the real estate sector, retail sales, and exports. Some foreign funds are actively looking for undervalued opportunities in countries like Poland. And let's be honest, Poland is still one of the biggest economies in Central Europe with strong fundamentals. Still, it's a balancing act. If investors sense inflation risk and a stable currency, they might want to pull out. But if they see a growth potential, money could flow into the Polish stock market. One important thing to keep in mind that while most companies benefit from the lower interest rates, banks are an exception. They typically perform better when interest rates are higher since it increases their profit margins. If you are thinking about investing in the Polish stock market, remember that the Big 20 index, made up of the 20 largest listed companies, includes 5 major banks. So lower interest rates can negatively affect a big portion of that index. On the other hand, the MBIG 40 and SBIG 80 indexes, which represent 40 mid-sized and 80 small companies in Poland, aren't as heavily exposed to the banking sector. So if you are concerned about having too many banks in your portfolio, these indexes might be worth a closer look. As a little bonus, I've included a chart showing historical changes in Poland's interest rates alongside the Big 20 index. Feel free to pause the video and take a closer look, but to be honest, I don't really see a strong correlation between them. Let's now move on to the Polish Treasury bonds. If you watched my earlier video comparing various asset classes in Poland, you know that I am a big fan of Polish Treasury bonds. Here's why. You can start investing with as little as 100 zloty. They offer stable returns higher than the bank savings accounts. You can redeem them early with just a small fee. Some of my favorite options include 3-year bonds, fixed rate, currently with the rate 5.95%. 4-year bonds, 6.3% in the first year, then CPI plus 1.5 margin. 10-year bonds, 6.55 in the first year, then CPI plus 2% margin. These rates are usually a bit higher than the National Bank of Poland reference rate. So if the interest rates eventually come down, future bond offers might be less attractive. That's why locking in a good fixed rate might be a smart move, which by the way is my exact plan after my next paycheck. And now, how interest rates affect real estates in Poland. When speaking about real estates, I mostly mean apartments and houses. There are many factors which affect the prices of flats in Poland, but in my opinion, the most important one is wages. In this chart, you can see how the average monthly wage and average price per square meter of a flat changed from 2006 to 2024. Apart from the 2008 bubble, there's a strong correlation between wage growth and the housing prices. So in the long run, if the Polish economy grows and wages rise, housing prices will likely go up too. In the short term, interest rates and the government subsidies also matter. From 2020, when interest rates were at record lows, flat prices exploded. Later in 2022, the interest rates were at the high, but the government launched the Bezpieczny Credit 2% program. It offered first-time homebuyers a mortgage with a fixed 2% interest rate for the first 10 years. The state covered the difference between the market rate and 2%, making housing more affordable for young people and families. This got prices to rise even more. Currently, with the interest rate relatively high and no active government support program in place, the market has slowed down. Prices have stabilized or slightly dropped in some cities, and listings on sites like Autodol are at record highs. Many people simply can't afford a mortgage right now. But if the interest rates go down again, mortgages will get cheaper and demand might rise. The government has also mentioned plans for a new support program, but it's too early to say what that will look like. Short-term real estate trends are hard to predict, but interest rate decision will continue to play a big role in shaping the market. What topic are you the most interested in? Polish stock market, real estate, or bonds? Let me know in the comment down below so I can cover this in more details in upcoming episodes. And if you want to see how investment in these 3 different asset classes compare against American stocks or even Bitcoin, check out this video right here. Thanks for watching. I'm Piotr from MyInvest and I see you in the next one.